There's such a fine line, making money and losing money in the market.
We want to teach you the concepts.
You have to be okay with the type of trader that you are.
We want to teach you the processes.
This is what really gives the meat and potatoes to it.
We're going to teach you how to.
The bottom line is you want to make money trading.
I can promise you that I can make you a better trader.
Join T3 Live at the Boca Raton Hotel and Resort April 26th and 27th for an exclusive trading education event. Sign up now.
Good afternoon, everybody. This is Mark. We're back here for the daily recap. It is Monday, the week after some holidays. Hopefully everybody had a very good weekend. I've been away all last week, and you come back today, and quite frankly, you know, a little bit of light tape, I would say, but I don't think there was a whole lot of damage done. Intraday and at the end of the day are two different things. You know, it looks a lot worse intraday. Sometimes, you know, if you just take a snapshot at midday, say, and at the end of the day we close relatively okay, unscathed. The only, you know, indice that I would say possibly could be a red light is the IWMs. They were the weakest all day. They still closed right at the 21-day moving average, so not a whole lot of damage, but it looks like minimum they need a rest. They have been the strongest industry year to date, so that's not unexpected. Overall, industry groups, you know, again, we were a little weak today, but really not a whole lot of damage done. Take away a few, you know, outliers, which, i.e. Apple, again, could not hold the bid, and that continues to be the MO. It seems like, you know, 419 is going to be the new low. I'm assuming it's going to hit there at some point very shortly, if not tomorrow. And then you have to look at the weekly to see where the next support is. The next support is probably around 200-day 396 on the weekly. That would be what I would look at as the next level. But again, it has not found a bid. It's a momentum stock that, quite frankly, has no momentum and is hated on Wall Street. And for right now, it still is technically a broken stock. The banks have not really acted so great in this tape yet. They're still hanging in the top third of the trading range. I put up Goldman Sachs, still holding roughly above 145-ish, still hanging below some key moving averages. So it's not necessarily, there's no signals to say let's get along, but at the same time, it doesn't worry me so much, not yet, and the volume is really light right around here. FAS, same type of idea, a little better looking chart, actually looked pretty good this morning, came in very fast after the number this morning at 10 a.m. It's still holding above its 200-day, its 21-day. So to me, still looks good, and you can just go down the list. Citigroup, JP Morgan, then Citigroup. Not great looking patterns, but again, still intact overall. And I think they're going to still find a bid somewhere. It's just a matter of timing is everything in this tape, and that's where you have to really start looking. From a weak standpoint, high beta, it's really hit or miss. You had Netflix off a little bit today. Trouble sign, we'll have to wait and see. The volume today was not terrible. Below 175, below, you know, that's 8-day. The 50-day, I'm sorry, will probably give me some, you know, agita and say, you know what, there's some downward action in place. It's only about $7 away from that. That can happen in a blip for Netflix. Right now, still hanging in there. Same thing with LinkedIn. You know, hit its 21-day moving average today, held in there. Not acting great today. Amazon, same type of tape. Google, possibly trying to find a bid here, roughly around the 800 level. Didn't quite touch its 50-day moving average, but had a little bit of a bid today. Still hanging below, you know, the 21-day moving average and certainly the 8-day moving average. We'll have to see if it can recover above there. Okay, from that point of view. Biotechs, they seem to be the industry that everybody wants to be in. When I was gone, I just, you know, looking at some of the charts, BIB, very impressive. Amgen, very impressive, a little extended at this point. Celgene, looks great. You know, probably a little extended. ALXN had a move today. And then right at the end of the day, we had some really quick moves. Not sure why. UNH, big move. On Humana, big move, and then obviously that was the first to go, and then you had WellPoint, new highs, UNH, new highs. Aetna, new highs, and you can go down the list of CI had an okay move. CVH, I think, probably had a new. So we'll have to wait and see if there's going to be some news behind why these stocks really moved 1 or 2% right at the end of the day, the last 20, 30 minutes of the day. I'm not sure why, but we'll have to look into it. It's a tale of two tapes at this point in time, guys. You know, it's funny. Looking at a portfolio of the stuff that was in play for the last half of last year, and you just put it on top of what we're looking at right now, I think it's a tough go. We're right now, stock selection is key. Trying to find the best in breed, being in the ones that really are the movers this year is key. And they are recycling. They're not the same names that we were last year. So you really have to be on top of your game and do your work and do your research. eBay had, I believe, 5 upgrades this morning. You know, I was talking about, I did buy options down at around the 50 level, close to the 200-day, and it obviously has recovered. I think at this point the move is probably going to rest here until earnings. Understanding we have 2 weeks to earnings, that might be just a time for a lot of these stocks to take a break if they made a nice move, or quite frankly, if they're just hovering and meandering in a tight range. That might be the reason why. Big boys, lots of big boys, lots of sort of run to safety defensive stocks. I saw PG today, talked about it, looks really good. You know, Walmart I was looking at looks good just from a technical point of view. McDonald's still looks great. Whirlpool still looks great. So you have a lot of stocks that's still hanging up there, and I still think the trend is your friend, and it makes sense to be long. I just think it's getting a little trickier, trying to find where and the industry and the sector to be in, getting a little bit more difficult, but you got to be smart. Right now, the last few days, and I believe last week because it was the holiday, volume has been light, and we'll have to wait and see. Maybe after Wednesday, volume kicks in a little bit. Overall, oil, ags, you know, Monsanto seems like it's a best in breed. It's so weird. You know, we had AGU and CF for the best in breed 2 months ago, and you can see what happened to them. AGU, you know, high of 116 all the way back down below its 200-day, you know, 296. CF, same type of trade, all the way to 235, and now it's back to 190. CF actually just took a stab at this today. Small, very, you know, tier 1 position, just understanding that, you know, obviously the sell-off, just looking for a possible opportunity. No adding for me. It's still technically a broken pattern, but in this tape, you know, buying some of these stocks on pullbacks has been working and profitable from a trading point of view. Overall, that's where we're at. I think the bid is still in. I didn't like how the first of the month we weren't up, because that's really where new money gets put to work the first of the month. It didn't happen. Does it concern me a little bit? We'll have to see how the week rolls on. We're back to you know, down on the Monday of each week. We'll see if that comes into play. Overall, guys, this market still looks good. You just got to be in the right sectors and the right stocks in each sector. Right now, biotechs are leading, and I think high beta, you hit or miss. Banks are basing, home builders are basing, oil, ags lagging, solar's lagging. That's where we're at. That's where we're at. So, and I think defensive stocks, you know, dividend paying defensive stocks are back in play and back in vogue. So you got to do your work, and that's where we're at. Looking at, just wrapping up, we'll look at the Qs, because I actually think that if it can actually close above 69.10, I think there's a quick move to 70, so just a longer-term indice play for people to look at. That might mean Apple needs to find a bid, and I don't know if that's going to happen. IWMs, as I said earlier, you know, under a little pressure, still right at the 21 days, so not too much concern. Spiders still hanging in there and looks fine. Looks like no damage was done. It just was a break today. And that's where we're at, guys. I know trading is, you know, from an intraday point of view, doesn't seem like there's a whole lot going on. I just think you got to find your action and be patient with the plays, because they do come to fruition, and there's times and places for that. And respect the fact that we are 2 weeks away from earnings. That's when a lot of the action will start taking place. Have a good day. I'll see you tomorrow.